Good turnaround Tuesday, everybody. How's everyone doing? Lowell, haven't seen your name for a while. Nice to see your name. How have you been, my training warrior brother? Oh, yeah? What made you think of that, Alexander? Hello, everyone. Scott, how are you? Brock? Whoops. You guys are too big now here. I bet, yeah, Amira, I bet you want platinum. Yeah. So, anyway, that's what I was going to start with, Alexander. Buy stops got picked off. So, last week, I think Monica was asking about NASDAQ, and she wanted to know if this was a double top or it was a continuation formation for a bull move. And I proposed a third option that we could have a stop hunt because this high right here was exactly the same as this high right here. So anyone who had stops here and got short was probably breathing heavy here and then read the sigh of relief here. And then anyone who started to short it when we broke this uptrend, um, there were a ton of stops here, I believe. So they got elected yesterday, and it looks like a false breakout to me. We're back under the double top. So congratulations, Alexander. If you took that trade yesterday looking for a false breakdown, you got it. Also, just for a correction now, mind you, the gold is hanging on by a thread here on the 2-hour moving average. See this? I would love to see one more shot up above the highs. I scalped it Sunday night into Monday morning, and maybe we get one more high here. You look at a 15-minute, well, it's too short term. Anyway, here, having some problems making some upward progress here in the gold. Silver actually even a little weaker. I mean, gold's making new highs without silver, a few of them already. See, so I'm going to wait. I'd like to see, even though this high here was Sunday night, I think it was there for an instant, one of those ghost trades, and it did. Look at the high, 24.9480 here. And 24.9420. So again, here's another example of stops not being elected. So I'm going to wait for stops to be elected over this because I know that people that are trying to top pick silver, and I'm sure there aren't many left after this, they may go for stops up here. Let's see what else to talk about. Getting a nice pop in Euro Pound. It's an IDK and yen not giving up the ghost of this big reversal day yet. I think we have an inside day working here. Again, I'm trying to be patient and see if we could get some type of pullback down into this zone. And the dollar, after giving up a little bit yesterday, is popping. I don't know if this was deep enough, but it's popping yesterday's day. Yeah, see, so trying to reverse it and turning here. There are so many dollar bulls that, Blake's call for 95.50 could be possible. I'm not long the dollar in any way right now. I thought that we might have a shot for one more low in the Dixie down to this line. Shows up better on the weekly. Down towards where these lines are, just a little inside weeks right here, so you never know. And I was looking for a tag of this red line similar to what the yen did last Thursday night when I was sleeping off this red line, these speed lines here. So, um, yeah, I'm not long the dollar. I'm not short the dollar. I have nothing. I'm mainly just short indexes right here. S&P is also kind of negative. Maybe we'll get a reversal week. Although all they have to do is pull out the relief package before the NFP on Friday, and maybe that would be enough to generate a new high. If they wait and there's some damage and then they have a relief package, then it becomes potentially a failing rally. So the Bears need to make some progress here in case the administration pulls something out of the hat going into the employment numbers. I read on Twitter, I think Scott sent it to me, that a lot of people think if they do it, they would do it right before the employment numbers, um, because they're market sensitive with what's going on. But same thing kind of happened in the S&Ps here. We took out these highs of 92 by 10. So the Nasdaq was a little bit more of a stop hunt, but you could have the same thing here. We're back under this 3280. Of course, this is the line of death for me. And look, we're almost there. We were there. We tagged it last week, then tried it again Friday before this candle that created one more squeeze to the upside. One other thing I'm looking for here, I'm really carefully watching the 10-year yield because of what the yen is doing, and it still looks like we could get another low. This low was confirmed here. And when you look at it long term, Peter Goodburn doesn't think we're going to take out this low. When Peter was here, he said about 44 on the 10-year. So these are the lowest closes, though, because we never stuck down here. So if we're going to have a bull move in the yen, I'd be expecting some type of low in 10-year. So we'll see what happens, see if we could get down to Peter's number. I'm going to be patient. So I'd like to see US dollar yen back around 105 and another low without taking out the spike low in 10-year yield. Any questions on anything I've covered so far this morning? Before I turn it over to Blake to do the bias chart and hear about what he's thinking going into Tuesday. Anything? Okay. Well, good luck today, everyone. And Blake, how are you? What's 5
Good
times
morning, Dale.
5? Hey.
How you
Hi,
doing?
how are you, Blake?
I'm awake.
It didn't feel as rough for me this morning. I don't know. I took some Geritol before I went to sleep.
Yeah, it's I still, for me, I get a little 5-month break throughout the course of the year. I feel bad for you. You're just being on the West Coast, you're just kind of screwed all year around, huh?
Yeah,
So
I'll have to move to Florida or something.
ugh.
Another COVID hotspot, but
No,
I got 3 more hours.
I'm gonna tell you, I'm just not a big Florida fan, and it's not because of I actually think Florida is a pretty state to see.
Yeah.
It's the humidity kills me. I'm
Oh, yeah.
growing up in the desert like I am. I'm a desert rat, so
Yeah.
when I
It's the
go into
dry heat.
yeah, there is a big difference. So when I go into humid climates, I just can't. I just can't do it. I don't get how people can do it. But then again, people look at me and like probably
Yeah.
think the
They
exact
wonder
same
how
thing.
you could do it.
Right, exactly.
My sister's in Palm Desert. I wonder how she could do it. But I tried it for a while. And I was one of those zonies driving out to San Diego every weekend. So
she's in Palm Desert.
yeah,
Palm Desert's a lot like where I
Yeah.
live. It's the desert. I mean,
Yeah.
it's actually quite pretty there. Well, we could sit here and talk probably different.
Look what Alice Cooper said. Bill Holman said, "Pizza ovens are a dry heat too." Alice Cooper.
So
And
what
he's
we
a
should
desert
probably
rat.
what we should probably do, Dale, is get to the markets. All right.
Okay.
So
Yeah.
all right. So So, you know, what we've seen actually overnight, and one of the things that I just did is I just pulled some profits off the US dollar Canadian. I was buying it overnight down below the 133 90 level, and as it popped up above 134.10, just where it's at right now, I took it off, not because I don't think it's going up. It's more of a kind of a scalping situation for me, because I'm not thoroughly convinced the equity markets are breaking down. However, I am pretty aggressively long the dollar Mexican peso, which most of you guys know. Once we broke this one or 22.33 level, I'm long, and I want to stay long, and it's acting really well
Nice
considering.
pip too for our clients, our subscribers could be long too.
Thank you, thank you. But you know, and here's the thing, Dale. We've talked about this for weeks about how it's diverged away from the move in the S&P. So when the S&P is, you know, going higher, the dollar Mexican peso should have been going down. And actually where we're at right now is you got people that were probably trying to play this head and shoulder pattern, trying to play a breakdown below 22, and then, you know, we got this big reversal. Now you're getting people stopped out. What you're going to start to attract are traders who want to be long soon, especially if stocks start to break down. So what I'm looking for is if we start to see a little bit of sell off in equities, you know, you're going to start to see a strengthening of the dollar Mexican peso. And it's not just the dollar Mexican peso. Take a look at the rand, which is ripping higher. I know we talked about it yesterday. The Turkish lira finally got itself up and started moving, and you know, the ruble is, you know, trying to move as well. So you're seeing these emerging market currencies are, you know, catching a, well, in this case they're catching an offer, but the dollar's catching a bid against them, and that's usually a signal of risk off. Now it is Tuesday, and we are in the second trading day of August, and August typically is going to be seasonally a little bit tougher time for equities, and also typically a stronger seasonal month for the dollar. So when you have stocks that, you know, had the very first day, um, you know, the very first day up of the month in August, we might, you know, spend the next couple of weeks coming back down again, and you can see this nice little wedge that's been developing here with the S&P, and I'm not I'm not going to get excited about the S&P, about possible downside about with the S&P until we get below 3,200. But at the same time, if you look at, you know, the S&P getting really close to that 127% extension and possibly a false breakout here, you know, I think the risk is starting to build for downside. Matter of fact, while I'm on this chart, I might as well just start building out the bias chart, because I got Steve and Stelios coming. So let's.
That's a nice look, Blake. I like that wedge. Nice look.
Okay.
It's only
Thank
good
you.
actually, but I'm going to talk macro today, so no worries at all.
You're going to talk macro?
Macaroni,
Mackerels.
Macaroni? You got it. All right. Macaroni is
Mackerel's
good.
a fish.
So I'm going to mark up resistance here is 3305, which is the overnight high. We can stretch higher than that, but 3305, 33, what is that? 3315, I think it is. 3316, sorry. There. We're still bullish while we're above 32. Well, 3250 is the wedge support, but really it's 3200. And you know, this is, you know, the same situation that we had the last couple of days. Is I'll tell you I'm bullish, but that doesn't mean I'm like super bullish, and that doesn't mean you can't go counter trend. Whenever you're looking at a bias chart, the bias chart is trying to give you more of a swing to intermediate trend in the market. I can say something is bullish or bearish and trade against it at any time. But whenever, like, let's say I'm like, okay, I'm bullish the S&P overall, but I want to take a short here because I think, move back below 3250 is going to take us back to 3200. I know it's counter trend. So therefore, knowing that it's counter trend, I just take a smaller position. And that's, if you normally trade 10, trade 5, if you normally trade 2, trade 1, if you normally trade, 5, trade 2 or 3, it's, when I say 5 or 10, I'm talking lots, shares, whatever your position size is. So again, the importance of putting in a bias is knowing what direction, generally speaking, a currency or an index is traveling. And if you decide to go opposite that direction, you want to take, instead of full size positions, half size positions, quarter size positions, that type of thing. All right. Helps reduce your risk. All right. So anyway, I needed to talk about the S&P, but let's talk about the FX market and get these out of the way. So if you look at the euro, I think a head and shoulder pattern is developing. And what you'll notice here is the neckline is at 117. And it's pretty, whoops, I don't want to do that. The neckline at 117, it's pretty, in my opinion, it's pretty clear here. As long as we stay below 118. I had an order to sell the euro dollar overnight at 118 and a quarter. And then Amanda in the chat room is trying to undercut me at 118.23, which neither one of us got hit because the high overnight was 118.06. So the problem with the euro is, if, because I didn't get a short off overnight above 118, I'm kind of leaving it alone for now. But I do think the 118 to 117 is your playground today. Okay, 117. Asterisk means it's important support for me. 118 is resistance. It is in a bullish trend. I know it's come off pretty aggressively this morning, but it's still in a bullish trend overall. Let's talk about the cable. So the cable here, as you guys know, most of you guys know, I flipped short on Friday. Why? Because we hit 161% extension of this move. If you guys use our patterns in play, this was triggered July 31st, which was Friday, right? Yep, Friday. At the 131.10, 131 and a quarter, I wanted to make sure it rejected, that resistance. So we actually hit the resistance and came off before I put it in. But that was 161% extension of this move plus horizontal resistance. So, it's been struggling ever since then. But what I'd like to see is it actually break back below 130 before I get too excited about it. And that would mean we'd have to break back below this 38% retracement, really. But you could see how we're challenging, some horizontal support, trendline support. So really a move below 129.90 would be optimal. 129.90. It still is bullish. Yes, I know I'm counter trend, but sometimes you gotta be counter trend. Resistance at 131. Not great resistance. It is just resistance. Resistance. This is the resistance. Okay, so the Aussie dollar is, we had the RBA overnight. The RBA didn't really do a whole lot, but I don't think they were as dovish as the market was hoping. That's why the Aussie is higher today. For now, I would say resistance is probably closer here to the 618. You can see these highs over here. It comes in around 71.70. And you guys do see it is bullish still. And you guys do see what happened yesterday, right? We went right off of 70.70. I don't know how many times we've talked about this being important support, but while we're above it, there's no reason to be bearish. I mean, you could be bearish from a intraday perspective, but trying to hold a position while you're above 70 on the short side, you just know that's really key support. So while you're close to it, you got to consider covering. And yesterday we just went down to 70.75 and then boop, right back up again. Now tonight we have the New Zealand employment data, so keep that in mind. And I'll tell you, if there's one currency pair that's trading a little heavy right now, it's the Kiwi. And you can see right now the 618 retracement held yesterday at 65.80. We dropped to 65.75, I think, last night, yesterday. That is going to be pretty important support. So 65.80 is support. Okay, that's going to be key support. And even though I'm going to put this as bullish, actually, you know what? I'm going to keep it more as a range. And the reason why I'm going to say that is because we can't even get back above this channel, which is pretty, if I was long the Kiwi, I'd be pretty nervous about that. So while we are below 66.25, you got to be really careful. Okay. Let's see here. Dollar Canadian. Let's talk about the Canadian. So the dollar Canadian, like I said, I just pulled my overnight long off. But you know what? I'm going to, I mean, longer term, you guys already know this. For those of you that listen in every day, we have a higher low. And you know, the lower low was put in June. This is a big support zone. You guys all know that. It's been drawn out there forever, for like months. We made a higher low, and I mean, the way I'm looking at it right now is I am looking at it like an inverted head and shoulder pattern at this point. I mean, there's a shoulder, there's a head, here's a shoulder. But, and I was kind of looking at this yesterday, but I can't get excited about it until we get back above, you know, right here, which is 134.80 or even, you know, 134.50. So, you know, support is 133.30. That's, you know, this level here, right? Right, 133.30. Resistance is at 134.50 and then 134.80. So 134.50, 134.80, and we are in a range. It's not bearish because we haven't been able to take out new trend lows as, you know, as the Aussie and the Kiwi hit new trend highs. The dollar Canadian was not able to hit new trend lows. And one of the things you need to keep an eye on, especially when you're dealing with this pair or the US dollar and Norwegian krona, which happened to be our chart of the day yesterday, which I'm going to do this really quick. Look, I'll make this really easy because it is easy. 9.0000. That's support. It's in a bearish trend. 920. That's resistance. The reason why that's resistance is because that's, you know, previous support. That means we would take out that trend line here. But the reason why I'm talking about the US dollar Norwegian krona and the US dollar Canadian dollar is because you guys have to keep an eye on crude. Crude, even though I'm not going to put it on our bias chart, it is below. Okay, see this trend line here? We were monitoring before that broke down. We were monitoring more of what we call a wedge. Here, I'll just draw it out for you real quick. Because this resistance at $42 was the previous breakdown point from right here, December of 2018 and June 2017. That was the $42 level. So we're monitoring this wedge. And then finally, we broke through the wedge to the downside, okay? And all we've done is we've back tested the underside of that trend line. So the risk for crude oil is still lower. I won't get too excited about it until we start breaking below $38. But the reason why this is so important, and here's why I give you the buts, is because if we start breaking lower, that's going to weaken the Canadian dollar and the Norwegian krona. So that will be just a quick, it'd be a possible bid right underneath those two currencies. So you got to keep that in mind. Okay, so I'm going to keep going. Dollar Canadian, dollar Mexican peso. This is the peso. While we're above 22.35, 22.40, we are bullish now. I'm not going to spend a whole lot of time here because you guys already know how I feel about this. Resistance right now is at 22.88. Swissy. So the Swissy, here's your daily chart, right? Actually, you know what? Here's your weekly chart. Multi-year trend line. Yesterday, we basically hit it. Our bounce came right to the underside of that multi-year trend line that we broke. So that tells you how important, and remember we had resistance. If I'm not mistaken, resistance was written down as 92.40 yesterday. Does anybody have the bias chart from yesterday? Oh, never mind, I do. Let me find it. I got it. I think I do. From yesterday. August 3rd. Today, August 4th. Yeah. Bias chart resistance yesterday, 92.40. We hit 92.40 and reversed. That was what we wrote down yesterday, 92.40. We hit 92.40 and reversed on a dime. Shows you how important that resistance is, right?
Okay. Impressive.
Hey, man, if you can do this stuff ahead of time and it makes that big of a difference in your trading, then,
Absolutely.
Right? All right. So support. I would assume now dips back to 91 because this is probably an extreme move here. So now you're going to get dips back to 91 and a quarter. Probably going to find some support, maybe down to 91. But I'll probably, whoops, that's not what I want. I'll probably write down 91 just to give it a little bit of room. Let's go to dollar yen. Oh, damn it. Let me get rid of that. We don't need that anymore. Dollar yen. So this is our channel. That was a 50% retracement of the entire move. This is a downsloping trend line. So I don't think we're getting there. I thought if we were going to make the move yesterday, we would have got to 107. I would have sold at 107 if we would have got there yesterday. But now that this trend line is descending, and I'm going to write down 106.75 now. One of the things you got to keep in mind with this this dollar yen, and I'm not trading it, by the way. It looks like we're consolidating here. You can't get too excited about downside. Well, for a couple reasons. If you see the moves below, all these moves below 104.50, they're just scooped up. So, I'm having a little bit of a difficult time getting too bearish the dollar yen, but 105.50 is probably decent support for the day. Okay, let's go to, and it is in a range. Let's go to the dollar index. And by the way, dollar index is going to be bearish. Yeah, I know we got a little bit of a bounce, but here's your dollar index. As I've mentioned to you guys, any rally back to 94.50 is going to be, a good resistance. I'd be a seller up there of stuff, of dollars, if, depending on what currencies looks the best at that point, what pair looks the best. But 94.50 is pretty key resistance to keep the bearish trend alive. And remember from yesterday, I'll say it again. I do think the risk is we can get all the way back up to 95.50. You know, I do think we can get all the way back up here. I don't think we're going all the way up there, but I think it's possible. And you never know. I mean, you know, the euro comes down to 115, and yeah, we're going to be trading all the way back up towards 96 in the dollar index. So, and with that head and shoulder pattern that you saw in the euro, it's entirely possible, right? Okay, so support. Here's like that inverted head and shoulder pattern with the it's just the opposite of the euro right now. So any move down to the 93.15 level should offer some support. 93.15. Oh, imagine this with gold. Okay. Look, I'll write down the numbers without even writing down anything else. 1900, 1920, 1980, 2000. And you know what gold's doing? Stelios, you know what gold is doing?
What, going up for the last 10,000 years? I'm kidding.
Yeah. It's just all it's doing is it's consolidating and working off overbought conditions. I mean, look,
Yes.
you know, you guys could, you know, sit here all day long and tell me, you know, oh, the RSI is so overbought and, you know, it can't go up any further, you know, it's divergent, blah, blah, blah. But when you have a trend this strong, what happens when you have really strong trends with like relative strength is they get overbought, then they consolidate. And when they consolidate, relative strength moderates again. And you know, we may spend the next 2 weeks of gold sitting above 1900. Relative strength will do this, come back down mid-range, and then, you know, we'll get that next leg higher in gold towards 2200, and then, you know, relative strength pops back up to 80. That's how we work off overbought conditions.
Yeah.
But continue to go up. So when you see markets that are in one direction, not like the band, but, you know, like one direction, higher or lower, it is that's how they do it. And, you know, that's why when you as a technical analyst, you know, you look at charts and you go, well, it's so overbought, you know, I can't buy it. That's, you know, or oversold, you know, I can't short it. That may be against your rules, but that doesn't mean it won't continue. You know, like I do have for me to establish a new position in gold right now, like a fresh long position, I can't do it. But that doesn't mean it's not going up. You know what I'm saying?
Yeah.
Anyway, good morning,
And market's
Stelios.
on top with RSI near 90.
No, it's a good point.
Hardly ever. That would be an aberration.
It's tough for them to do. Yeah, exactly. So good morning, Stelios. I think Steve's probably here. Good morning, Steve.
Steve is not. He has a doctor's appointment, so it's going to be me, you, and Dale. Actually, me and Dale now. So, you know, I can talk a bit macro today, no problem at all. And,
okay.
Yeah, no problem.
That sounds good. You know what? I'm going to do this. I'm going to pass you over the screen. I'm going to stay here, but I'm going to mute myself, and just in case you need me, I'm going to go get some coffee. So for those of you guys that, and let me just say a couple of things really quick, Stelios. For those of you that are Forex Analytics subscribers, I want to thank you for, you know, the continued support with Forex Analytics. For those of you that are not Forex Analytics subscribers, make sure you try us out. It's only $1 for 10 days. You get to download the mobile app. You get all of our analysis. You get to try out our chat rooms. That's where I'm at all day. You know, you can, this is our chat room right here, just so you guys can see it. And those people are on Jumbotron right now.
Look at all those action junkies.
Yeah, I mean, there's 82 of us in there right now. So, and you can see that there's, there's Stelios back there. I mean, we've been
82,
chatting
82
for,
gamblers hanging out together.
there's, you can see, I mean, this is hours ago, and there's a lot of chatting going on, and, we're just talking about markets and everything else. So, and by the way, for those of anybody else, wait, should probably go all the way back down here. And okay. So for those of you that that support us, thank you very much. For those of you that don't or haven't yet, make sure you try us out. And like I said, for $1, you get to use our premium product. Doesn't matter if you choose light eventually, if you want to go with the light version, but try it out. And for those of you that are, want to try to get Forex Analytics for free, you could do our Pepperstone. We have an agreement with Pepperstone, so if you open a live trading account, you can get Forex Analytics. You have to make sure you follow the right steps. You have to email us and that type of thing.
Yeah. So Alexander, don't forget to email us for
He's done it. He's done it already. We're taking care of it. Yeah.
And then once you've traded a couple lots, I think it's five lots, full lots, you get another 2 months of Forex Analytics for free. And then if you're in North America or Canada, because you can't qualify for Pepperstone, then you contact Forest Park FX, because Forest Park FX is our webinar sponsor, and they're the ones that help us make it all happen. So you can see their link. They're on our website. You can contact them directly. They'll help you find a broker of your choice. So I'm going to leave it with you guys, and I'll be here. I'm going to mute myself, but you guys have a great day. And Stelios, if you need me, I am here. So thanks, Coach.
Okay,
thank you. Let me take the screen.
Thanks, guys.
Let's see those macro.
And I'll see the rest of you guys on the daily roundup. By the way, the daily roundup's in 4 hours, and it is for the Forex Analytics community. So I'll see you guys there for sure. Okay.
Thank you, Blake. So, Coach, how are you doing? Everything all right?
Good. Nice look. I like that wedge you have there. Actually, if we do roll over, that's kind of the target where you have it anchored around 2,800.
Yep.
If we break down. Yeah.
Well, let's see how that goes. Let me get a couple of things out of the way first before we go to talk to charts and talk about charts and everything. So what happened yesterday, like Blake mentioned, the RBA kept rates unchanged. They said a bit of the same, like pretty much every central bank is saying. So the outlook is very uncertain. Well, I understand them by saying that. And they also said the measures that they are using to support the economy are working, and they will stay in place for as long as is needed. So more for more time and longer, and as long as is needed, might be forever, but you never know. Excuse me. Yeah, so that was the RBA. I mean, I think as a result, it didn't really move the Aussie that much. The other thing that we had was President Trump. He did say that, or tweet, I think, that some of the measures that were voted in March, they have expired, and he did say that he might unilaterally bring them back if there is no agreement, et cetera, et cetera. He might just go ahead and do them. There is, in particular, he was talking about the payroll tax holiday and moratorium on evictions, and maybe more checks and unemployment payments and all that. So he is determined to keep the pedal to the metal and support the economy for as long as needed, or maybe until November. You never know. And so that's what's happening on US. Very little else happening on the economic data front, and really we're just waiting for payrolls on Friday. So let's have a look at a few charts. The thing I always ask myself, when I look at currencies, metals, oil, everything, what is the main thing that's driving markets at the moment? And this has been the case for months now. and that's equities. So it's been a pretty distinct risk on, risk off environment, and equities are still calling the shots. So what do? I usually look at daily, monthly, and weekly charts because I like that. And one of my favorite things is when a long-term trend line or structure or whatever is broken and then retested. I absolutely love that because from all the years I've been trading, I think there's a very good chance, something like, if you ask me to put a number to it, I'd say 70% chance that this thing continues if it's broken and retested. So on the S&P, this is something I've been looking at. And if you guys remember, late 2018, we had this huge, I had this on a weekly actually, but it's the same on the daily, a huge trend line. It got broken, got tested actually a couple of times. And then we had this nice move lower. And then we had another run from then on until March of this year. And if you see here, it got retested almost to the pip. And then obviously we all know what happened then. Obviously, if the trend line or the structure that you're looking at is big, it's bigger in terms of time frame, then the reaction is going to be bigger as well once it gets broken or not. I mean, I'm not saying this is going to happen, but it looks like a wedge. It's a much smaller one, obviously, than the ones before. But we have to make a decision here. And if this gets broken to the upside, which I don't say that it's not going to, it might do. I think then we're going to get new all-time highs. And if that happens, then I think that's going to suck in quite a few people to the long side. Is going to stop a lot of people also, because when you see this all-time highs, where the stop's going to be, probably just above them. So I think if we do see this break, we'll get to 3,400, probably overrun it a little bit, 3,450, 3,480. I don't know how where it could go, but then I still think that there is a correction to come. Now, if we don't break this upper side of the wedge, and we go and break the lower side, if we do get a retest there as well, which I would love to see that, then I think we're definitely heading towards 2,800 that you said, Dale. I think that's realistic, and also it will depend on the global economic and geopolitical background. What's happening. Does that the timing of that, does that coincide with autumn and with how COVID reacts again? We're seeing stories everywhere, all over the world, where there's more cases of lockdowns, partial lockdowns and restrictions, and all these things, which are, let's face it, they're not going to be good for the economy. I mean, there's no way it can be good. Having said that, what we are seeing, and what we have seen from March onwards, is all central banks coming in, providing unlimited supply effectively, and just propping up the markets. And in terms of nominal terms, we're seeing equity markets go higher. We're going to see a lot of assets go higher. The question is, in terms of real terms, what's that going to be like? The purchasing power of currencies, how is that going to be affected? I was actually seeing with a few friends of mine today, my friends from London. I used to own a flat in London, and I bought it in 2005, sold it in 2010, just before I returned to Greece. I went back and had a look at it. Its price is doubled since I sold it. And this is after a 10, 15-year run of ridiculous increases in price. So you're seeing this everywhere, at least in most major cities. You see property going up, you see education, university fees, school fees. I see them even here in my kids, but I hear stories about schools and universities in the UK, in the US. It's all going up at double-digit rates. It's not. It's definitely not 1 or 2% that they're trying to tell us it is. But anyway, I'm diverging a little bit. So this is my view for the S&P. We have to make a decision. Do we get new all-time highs and then correct, or do we correct here and then we see? It's going to depend, I fear, on how the coronavirus situation continues and how it evolves. So that's with stocks. Another one I want to have a look at is oil. Oil, we saw. Let me go on to weekly. Actually, no, that's okay. for guys, for the people who have been listening to Face and following Forex Analytics for years now, I've always said that oil is a very peculiar instrument because of the very specific way it's being controlled on the supply side. And what we've seen is that whenever price rises a lot, you get the producers who hedge their future production, and that brings selling pressure to the price, because they lock in, all these nice forward prices just to be, because they want to reduce a little bit of their risk and their exposure, and it makes sense. On the way down, what we do see is that you see producers with high production costs, well, they cut production straight away. Look at what's happened with Baker Hughes oil rig count. Actually, can you excuse me for just 1 second? 1 second. Dale, can you just take over for
Go
1
ahead,
second,
buddy.
please?
All right. So I'm going to talk about Stell's chart, leave it up there. So, we're in this zone right here in oil. And it's my belief that we're...
Dale, I have to go for literally 2 minutes. I'll be right back. Okay.
Go ahead, buddy.
That's
Go
fine.
ahead.
I'm here too.
Thank you.
All right. So anyway, if you could see Stell's chart, that purple area, I don't know where the high comes in. Maybe it's 42, 44, but crude had that break to 38.5 and it's fought its way back. There's a shot for a marginal new high, but so far we're having a little bit of a failure on a retrace. But to me, this is not the place to look to be getting long crude. Maybe if it starts closing over that big moving average, that daily moving average, looks like he has a 200 at 42.80. So that's still above the high of the move. So we'll see what happens there. But you look at oil, you look at S&Ps, you look at silver and gold, and this is one of the weakest recoveries of the binary recovery that we've had in all asset classes across the board. So I think there's a short coming here, and why not at least back towards 30 or 28? You could see once we got over 30, really never looked back. So be kind of a natural thing for it to do, especially if we get some risk off and people start worrying about economic growth. Just less contraction. So unless there's some type of geo event in the Persian Gulf, I think we're going down in the crude oil market. I think Stell is constructive long term, and even if you are, I'm a betting man. I bet you'll be able to buy it with a 3 handle, not $3, $30 handle. Yeah, that's what I mean. What growth? Okay, so and you know what? You could also look for this to maybe even lead. But if you put up all your charts, silver, S&Ps, everything that's recovered, the metals, gold, this is your weak sister. All we've gotten back to is previous support, where silver's blown to new highs, S&Ps are close to making new highs, gold made new highs. So pretty obvious to me that the relative weakness of the instruments is right here in energy. I actually know some people think we'll trade sub 20 again, and they're bullish long term. So, I'd look for shorting opportunities. We had one a few weeks ago up there above 42, and I'm just going to wait for Stell to come and finish up talking.
So you can
about
can
crude.
Hey, I'm back. Sorry about that.
Oh, no, it's okay. So Stella, let me ask you about crude. You have this purple zone here.
Yes.
What's the top of the purple zone? Is that like 44 or so?
It's approximately, It's about 44, yeah.
Okay. So I'm thinking, knowing you for the last 3.5 years, that you're constructive on the energy, but would you wait for some type of pullback? I was saying that out of all, everything went down together into March and everything's recovered. This has been the weakest recovery compared to silver and S&Ps and almost everything that came back.
Yes.
All this did was get back to old support.
Yes, I mean, I think the big difference is that demand in oil is still weak, and with the global situation that is as it is, it's probably going to weaken more. Especially if we get more local, or even more, lockdowns or whatever it is. I think the problem is demand is weak. It's recovered first of all because it went to negative levels, which was just a pure play on
I
futures.
never thought I would ever see that.
Yeah. Well,
I mean, I never even thought of it even happening.
Yeah, me too, actually. But it was a pure play on futures, on an instrument. It was nothing to do with the actual thing. But I've been saying for a long time, whenever oil drops below, I always said 20s or even 30s is always going to be temporary, because you get the producers that actually, the shale producers who actually caused the big sell-off in 2014. They have high extraction costs. So they've all shut down. I mean, if you look at the Baker Hughes rig counts, that's what I was saying before I left before. It went from an average of about 700 or 800. It's down to 160 or something like that now. So all these producers just stopped. They're very leveraged. They have high extraction costs. They just cannot flip a switch and go back to production straight away again. But also, as we go down to what I think are ridiculously low levels, teens, 20s, even 30s, that automatic stabilizer comes in and brings price up again. And this is a very important zone around the $40 level, because I was saying, if you remember here on Face, when oil was trading in 10s or 20 or whatever it is, I always said, I think we're going back to 40 eventually. How are we going to get there? I don't know, but we're going to go to 40, and there we have to make a decision. If things improve globally, then we're going higher. If not, then get ready for another leg lower. So that's my view on oil. And look at how momentum is stalled here. It's very telling. And I personally think risk assets, including oil, are gonna take a leg lower. But when is that going to happen? I don't know. I can't say exactly. But I think they're going to. Now you mentioned gold and silver, and they have very different characteristics. And demand on gold and silver is not as related to global economic activity. People don't buy gold to run their cars or whatever. It's a very different thing. Obviously, they get also smashed when equities drop quickly, but and we saw that in March. I mean, that was an amazing move, especially silver. Actually, gold is at all-time highs. The interesting one is silver. It's still the one that interests me. And look at this. I had this zone. Sorry, I had this zone drawn for a while, and look what happened. It just went below, took everybody out, and then smashed higher. I was quite nervous here, I must admit, because I've been long silver for about I had been long silver for about a couple of years, just under 2 years. I still have a quarter of my original position. I've taken profits all the way up, but down here, I must say, I was a little bit worried. But I just I have my fundamental thesis. It wasn't a leverage position, so I said, no, I'm just going to stick with it. And luckily enough, it went there. And look, it just touched the zone and came right back. I mean, that was just textbook technical moves. And now what I would really, really like is another move towards 19, but I don't think that's happening. I think we're going to stop below there, above there. So I think anywhere between 20 and a half and 21, I'm going to be buying back definitely the one I sold at, what was it, 25.20. And my view is still we're going higher. End of story. It's if we do get a risk off move, especially if we get a severe one, yes, gold and silver are going to go lower. How much lower, I don't know. I think it's going to be less severe than March, but they are definitely going to go lower. So I'm waiting for a pullback to get long. And another one.
I love your charts. I love your charts.
They're simple, man. I'm a simple man.
That's what I love about them, the simplicity of it.
Look, just 2 lines here.
You don't have to, you don't have to have a million lines and a million indicators, and it's just so clean. You're like the Forrest Gump of our company.
I run a lot. I'm actually pretty good at I'm pretty good at table tennis too, I must admit. But anyway, so DXY, so the dollar index, half of this obviously is euro, but it represents the dollar quite well. We were talking about this last week. Very, very big nearly 10-year ascending trend line. This on the weekly chart. It got broken. We're actually right back there now. So again, we have a decision to make that kind of matches up with the S&P chart. I think one way or another, this is going either the dollar just completely continues to drift lower, which means equities go higher, or we get a leg lower in equities and the dollar spikes. And remember, we're seeing emerging market currencies looking a little bit fragile. So it could mark the beginning of a of a dollar leg higher. Obviously I can't say for sure, but I think the risk reward for me would probably be to be long the DXY with a stop below wherever these lows were now. So let's have a look at USD SEK. We were looking at that last time, which was, you see, that too broke, but it's right there again. So it's not convincing yet, but I think this is another currency. We don't cover it at Forex Analytics, but it's a very nice currency to look at when you want to see something that leads the way in terms of dollar direction. What else can we have a look at? What else do you want me to look at, Dale? Anything in particular?
How about taking a
Sterling?
look at yields? What happened with your position that was
In
kind of a
bonds.
mutual fund position in
Oh.
bunds?
Yes, I still have that. I am short bonds for, what is it now, 2-3 months? So
Yeah, it feels like a year.
Yeah, it's a little bit in the red. It's probably down like 1.5% or something like that. So bond is still going.
They still comatose like our 10-year? No, you have bigger ranges. Yeah, okay.
I mean, this is a weekly chart, but
Okay.
if you go to something a little bit tighter, look, again, we're building something which, if it gets, we're something like that, and kind of, it's not really a channel, but anyway, the question is, what happens with the global environment? How much more negative can bonds go? That's a question at some point. It's a very tough call. Also, I own this, and it costs me nothing to own because it's a negative yield. I obviously don't get any benefit, but it costs me nothing. So I like to have that also as kind of a protection against something going really haywire. So basically, I'm still long a little bit of silver. I'm still short Euro Norway, which I like. It's gone well, and I like. And if something happens in the global economy and things get really bad again, obviously this is gonna go. This is gonna rally. But then more stimulus, more of everything. So in theory, gold, silver should outperform, etc. So it's a position I like. Obviously, I'm not going to keep it forever. If it doesn't do much in the next, I trade in terms of months. If it doesn't do much in the next, 2 or 3 months, then I might just cut it at the loss and move on. So.
And you still favor cable over euro, as far as European currencies?
I still like sterling more. This was my view on euro sterling. I would, I'm looking for this. At this point, when I drew this chart, I thought we're either going to go lower or we're going to hit these highs again. I would love this to hit 92, 93 to get short again. Simply because I think that at the end of the day, the Europeans and the EU and the UK eventually will agree to something. Don't ask me what that something is. I think they will. Is it good? Is it bad? It doesn't matter. It's an agreement on something, and then uncertainty is going to go away, and then the pound will slowly, I think, rise. It's not, obviously, the situation in the UK is not great, but I think a lot of bad things are priced in and have been priced into the pound. So I like that. I'm waiting for 92.5-ish to short this.
Okay, yeah, we talked about that high at 91.60 was confirmed on a shorter term chart, so you might get that shot. Up there. Yeah. You know what? A great presentation. I enjoyed interviewing you.
Thank you, Dale. We should do this.
I'm going to put you on the schedule.
Yeah.
Every Friday, I'm going to interview you. Okay, because I love the way you use a telescope. And thanks so much, Stel. It looks like our guest has arrived. And you know what? What a great team we have. You know,
Thank you,
it's
Jim.
like in the NFL when there used to be football. The key word was next man up. And we definitely have that spirit here to fill in for each other and not miss a beat. Nice job, bro.
Thanks,
Okay,
man.
Lance, I'm going to get you set up now. Really looking forward to having a discussion with you and making you a panelist now. And asking you to unmute. And I know you haven't used Zoom before, so I'll talk you through it. Welcome to Face, Lance.
Hi, how are you?
I'm great, man. In fact, I'm so brilliant that you better put on your shades. Anyway, really nice to meet you, Lance. You know, I did a little bit, looked at what you did. You're an RIA, and you know, you focus on sound money and mining shares. So I'm going to direct you how to share your screen. There's a little drop down menu on top that'll say share screen, green box.
I see it.
So you just click it and decide which one you want to show, and we'll get going.
Let's see here. What am I trying to share here?
Were there any charts or anything that you wanted to show, your website, anything, or you just want, I could take over the screen and talk about charts. You know, I know that you're focused on precious metals in your fund. So would you rather have me do it?
I didn't prepare any charts. So, I mean, I thought we were just going to talk through it.
All right. Well, next time bring a note from your mother, and if your dog ate your homework, that's okay too. So, all right.
I didn't even know you could do that.
Yeah. Yes. So next time. All right.
All right.
So anyway, why don't you tell us a little bit about your journey in the business? You know, what were you doing before you got into the markets and overseeing money? Did you have a mentor? Kind of a little bit about your journey, Lance. Tell us how you got from point A to B.
Yeah, well, I started with David Tice over in Dallas at the Prudent Bear Fund back in 2000. Yeah. So you know, I could tell 99 was going to end badly, and I wanted to go to work for a short seller, and he was here in town. I'm from Texas, from the Dallas-Fort Worth area.
Okay.
So hooked up with him, worked for him for several years, and then set up my own shop.
Okay. So I have to think that, you know, I mean, my first trade was when they made gold legal in 75 again, or 76 for U.S. citizens, and it opened on the board at 200.
Yeah, I had just been born about 3 years before.
Yeah, well, you know, I was thinking about your future then. So they took it down from 200 to 100. So I actually learned in a bear market, which really did have a major impact on me the rest of my career. I kind of learned that down is faster, although you could have parabolic moves to the upside too. So being with David and him capitalizing on some nice bear moves in 2000, did it ingrain you with bearishness, or have you learned to, you know, that even within, like Jim Cramer says, even in a bear market, there's a bull market somewhere, like right now?
No, I wouldn't say
metals.
Yeah, I wouldn't say it ingrained me with bearishness. It did, you know, have been bullish on gold for a long time. You know, during the bear market from I really count it from 2012 to 2015, I was short a lot in gold. In fact, 2015 was my best year on record. I think I was up like 160% that year.
Okay.
But you know, no, I have not remained a perma bear on equities in general, as you might have thought.
Okay, and gold. I mean, you know, most gold guys, their mantra is don't wait to buy gold and wait.
Mm-hmm.
And you know, if you bought it in 2011, you had to wait quite a while. I mean, you're whole again.
Yes.
But yeah, so here we are, knocking. We're at historic highs in gold. Gold silver ratio has come in dramatically between the two, do you still favor silver's outperformance going forward?
I think over time, silver will do better. In the short run, you know, I actually think you're probably going to be due for some kind of correction here. Just it's gotten a little overdone to the upside. Silver has failed to confirm the new highs in gold over the past week. The gold stocks have failed to confirm the new highs, and in fact, the GDX has been down the last 3 out of 5 days. The gold's actually been up and made new all-timers, which is usually not. You know, one day is statistically noise. If you go back and do the math, but several days starts to become a pattern, and it's usually bearish.
I was taught that too, that the shares should be leading the bullion. You ascribe to that philosophy too?
For the most part, there are occasions when that's not the case. But if you want to be long the gold stocks, you usually want to see them out in front and leading gold. That doesn't mean that gold can't necessarily trade up. It's just for the gold stocks to work well on the upside, you typically want to see that kind of action.
Yeah, I mean, look how much gold strength it took. And, you know, this was a huge rally in gold. I'm showing Newmont. Newmont just to eke out a marginal new high compared to the strength that we saw in gold. They look like two different charts. There's gold.
Well, and it's interesting you point out Newmont, because I mean that's the largest
bellwether.
Yeah, it's the big boy. It takes a lot of money to move it, and the fact that that one has not broken out with gold doing what it's doing, and you know the press is all over it. CNBC talks about it every day, all day, and everybody loves gold. DSIs in the 90s, the HDSIs hit an all-time record, up in the 90s. So there's
What's your take on this short squeeze article I think came out on Bloomberg about physical, that everyone's going to take delivery on their futures contracts and there's not enough gold to be delivered?
I'm not sure about that, because you had a lot of broken arbing going on back in March, April, that some of that had fed into the August contract as well, and into the other contracts because of COVID and the breakdown between refineries and being able to ship metal from London to New York. And there was a bunch of noise in there. I mean, you had gold trade at both a premium to spot and at a discount for certain periods of time. So it's not clear, I don't think, what exactly is going on there.
Okay, Lance. So, I also noticed that you write a daily market summary, and I can't get access to it because I didn't join yet, but what kind of coverage do you offer in here? Oh, let's see here. Free trial.
Well, here, tell you what, I think I can get you on here. Hang on a second.
Or you could share your screen and show it, but we'll do that for next time.
That's what I'm trying to do here. If I can pull it off. All right. So how do I share this?
Okay, so I have to stop sharing. So let me do that. Okay.
Okay. All right. What do I hit? Share screen?
Yeah.
And you cannot share while the other participant is sharing.
Okay, how about now?
Still says I can't.
Okay. All right. So, okay, we'll just yeah.
You're not missing out on that much.
Okay. Are you still there?
I'm still here. Can you hear me?
Okay, yeah. All right. So tell us a little bit about your writing. So is it as an RIA, you don't need to have credited investors to be in your fund. Why don't you tell us what you do as an RIA? Are they individual accounts, retirement accounts? And what's your major narrative? Do you do other things besides miners in your funds?
I take qualified investors only. And,
okay.
it's gold and gold equities, long and short.
Long and short. Okay.
And I do use some leverage, and but I don't I don't mess around with anywhere else outside of gold, silver, mining, and the metals themselves.
Okay. Any of the exotics like palladium or platinum that you pay attention to?
I mean, I can buy those things. I haven't in a long time.
Okay. So have you lightened up on this run? You start talking about things that tell you that sentiment is extreme. Gold shares not performing like bullion. Does that give you reasons to pair your positions up here?
Right, I did actually last Monday. I sold out of all my levered longs, and I actually turned net short the equities, the GDX specifically. Through.
How do you do that, with puts?
No, I do it through the leveraged ETFs, Dust. And JDust primarily. And I mean, I don't go full bore, but if you're looking at now it's 2 times instead of 3. So if you're 50%,
they changed it. So is
right.
Dust the inverted one?
Correct. Okay, so I'm currently I'm long Dust, so I'm effectively 2 times short GDX, and I'll stay short until I get the correction, I think, or if it makes a new high, I'll stop out of it.
Yeah, this is what happens when they have reverse splits, right?
Well, they had, it blew up back in March when it was 3 times, and they had to reduce the leverage because they had some problems.
Yeah. Okay, so there really isn't a lot of selections for you to play the short side in the ETF world, is there? Is this the only one?
There's JDust, which is
the juniors,
short, the GDXJ.
Okay.
The triple short metals, those kind of went away, and the triple long metals actually went away too, because you used to have UGLD, which was 3 times long GLD, and whoever it is that built that thing decided it was no more about a month ago, actually.
Oh, okay. And
which is a shame.
Yeah, so not a lot of options for you to how about futures? You ever use futures to trade the short
I
side?
don't. I mean, I've traded them before, but I don't use them for clients, no.
Okay. All right. Well, anything you want to bring up next time? We'll show your website, and maybe you could bring some charts and explain it. Why don't we do this? You probably are having a great year. I mean, we're in August, 8 months into it. What's your fund doing for the year?
Well, it's not a fund. They're individual.
Oh, that's right.
Accounts, and they're run pari passu, so they're all run in line. But yeah, it's a decent year. So we'll see how.
What's your biggest drawdown?
Well, that would have been back in March, and
okay, yeah.
That was gosh, it was like 25%. It wasn't good.
Yeah. So but you got it. That was one heck of a recovery. You have a view on just equities in general, the economy, COVID, anything geo that you think is going to be after we get this correction? And since you're a little bit negative, a little bit short, how much downside do you think there could be in a corrective move in gold?
I see less downside in gold than I do in the gold stocks. I'm a little concerned in the near term that you had a very similar situation back in August of 2007 when the mortgage market broke and the Fed eased aggressively. The dollar weakened, gold took off. Everybody assumed that inflation was going to occur. Gold took out the old 1980 high of 850 in I believe it was January or February of 2008. It peaked at 1,000 in early March of 2008. Gold bulls felt pretty smart, I myself included at the time. And but by the end of the year, gold had corrected 30% from that high, and the gold stocks had fallen about 70% based on the GDX. So of course, after that, gold went on to print 1900 a few years later. So
and the shares really didn't keep pace with that recovery.
Well, yeah, they crashed with the equity markets. So right. I mean, in the big picture, being bullish, gold was right, and it made a new all-time high, and that told you that more, new all-time highs were coming. However, in the short run, you had to sit through some turbulence, and I kind of worry that we could be looking at something similar now because where QE has basically replaced rate cuts back then. So everybody assumes because of QE, the dollar is going to continue to collapse and inflation's coming and gold's headed to the moon. We've just made a new all-time high, just like we did back in early 2008. Everybody assumes it's up and away. But, what if you do get another one of these deflationary waves? And because I don't think the economy, I don't see the transmission mechanism for inflation at the moment. I think you'll get it because what they'll eventually do is ACH cash into everybody's account. But that's not going to happen between now and the election, except for one more time with the stimulus package they're going to do. But when they actually start helicoptering money in to people's accounts, you will get inflation. But it's not going to happen now, I'm afraid, and therefore you could be in for some sort of nasty period on the other side of this before we really get paid with new all-time highs.
Yeah, well, I don't know how it's going to play out in the metals, but there are some major cycles due next spring in grains. You can't eat gold. And, if there's going to be price inflation, it's already showing up in the supermarket. But if we get a bull market in grains, that's really going to feed into the inflation psychology. And I think that, could be delayed until next spring. Planting. You have a view on the dollar as a gold guy?
I think over time the dollar is going to weaken. Is it going to zero tomorrow? Probably not. Specs are heavily short it right now. Everybody's negative on the dollar. The DSI for the dollar index hit 8.
Yeah,
it was on Thursday, which is zero. So you're probably due for some sort of counter trend rally in the short run. That would obviously feed into probably some weakness in gold.
Okay. Are you looking for some type of reset and the dollar to be dethroned as a reserve currency, like a lot of gold proponents are looking for some type of reset, maybe through the IMF, SDRs, etc.?
I think eventually something like that will happen. What I've learned over time is that these things always take a lot longer than you think. And I think eventually, yes, that will happen to the dollar, but when is the big question. Probably not soon. And, will gold be a component of whatever replaces it? Probably. But there again, it's the timing of all that coming together.
How about the election, Lance? I think, do you have any type of scenario of, depending upon who wins, what the impact may be on gold prices?
No, not in particular, not based on who wins. Because of the timing of the election, I do think that once you get some sort of agreement on the current stimulus package, which it may take stock prices going lower in order to force the politicians in Washington to do something. But once that's done, nothing's going to happen in Washington between now and the election. So they'll effectively be frozen. So if the economy does turn over again, markets turn over again between now and the election, it's going to drag on all asset prices. So that could actually be negative for gold, I think, in the fall potentially, because you won't have the ability for Congress to come out spending and write trillions in checks, because they won't do it between then and the election.
Okay. Do you have a bearish argument for Bitcoin? Most gold people some do, but most really don't really favor cryptocurrencies at all, because gold has a history to prove how it could, come through civilizations and still be standing.
I'm not negative on Bitcoin. I'm more agnostic, I would say, on Bitcoin.
Okay.
I have a lot of friends that are very bullish on Bitcoin, and they believe it's even better than gold. I'm more pointed towards something physical. Like you said, it's been around for thousands of years. Gold has,
Right.
whereas Bitcoin, EMP, and all of a sudden all your Bitcoin's gone.
Okay. And when you're looking at different gold stocks, what's the most important thing that you look at? Debt that they're carrying or production costs?
Well, I actually, I used to buy only individual names years ago, and around 2013, 2012, I started moving into more index-based buying of gold stocks, simply because I discovered over time that you never walked in one morning and a particular gold stock was up 25-30% just by itself because of
Discovery.
a large find or something. However,
Yeah.
you would frequently walk in the morning and a gold stock would be down 25-50% because it was expropriated or something happened or whatever. So generally you don't want to own gold stocks at all when they're in a bear market. So, but when they're in a bull market, they tend to all go up. Some obviously go up more than others based on, where the better companies are. But I would rather be diversified, and I'm more looking for the timing of the bigger move, together in a bull market, and trying to be short or avoid the bear market.
Okay. Well, Lance, the best place for people to get in touch with you, and remember, he only accepts credited investors. What is the standard now? $250,000 net worth outside your house?
Well, no, it's qualified actually for me.
Qualified.
It's not accredited, and
Okay.
It's 2 million, I believe, in net worth, or a million invested. So
Okay, so is this the best place for people to find you, Lance? I have you up here on the screen at dailymarketsummary.com for your daily letter, or they could also just go to your name on Twitter at Lance J. Lewis.
yeah, that's correct.
Okay. Well, it was nice meeting you, Lance, and good luck on this counter trend trade that you're taking. That'll be our tagline for your interview, and appreciate you spending the time in our community and talking to us about your view. It's interesting to me, and tells me you're a pro, that you notice a lot of things that are happening underneath the surface of a market to um, you know think that things go in both directions. So thanks again. You're now my trading warrior, brother, if you want to be.
I appreciate your time, Dale. It was fun. Next time I'll be better prepared with some charts and some fun pictures.
Okay. Thank you, Lance. Good hunting. I hope you and your loved ones remain untouched, and good hunting for you the remainder of the summer.
All right. Take it easy, Dale.
Okay. Thank you, everyone. That's Lance Lewis, and that's going to be a wrap of our Turnaround Tuesday. So I want to thank everyone for hanging out with us today, and I'm going to end the meeting. Remember, don't just count your pips, count your blessings. Good luck the rest of the day. Don't forget to sign up, and after Face, you could go right into our chat room, hang out with Blake and all the other traders. Thank you, guys. Adios.